Hi guys, welcome back to my channel. So this is another video tutorial on forex trading, the beginner series, how to trade forex, or this is the continuation of the series in getting started in forex. So I'm going to be talking about market structure and order flow. So this is lesson 11. Sorry, I've not been posting videos on forex for a while because I just gave you guys time to go through the beginners content. What I'm giving you guys now is the intermediate content. So we're done with the basics of forex, pips, lot size, all those stuff, uh, candles and all those are intermediate. All those are beginner content. So now I'm gonna be giving you all intermediate content, but sorry for the delay. So today I'm going to be talking about market structure and order flow. So what is market structure or order flow? It's basically how the market moves in kind of like patterns or in the movements of the market. So we have about three market patterns or market structure. The first one is the bullish order flow or trend. When we say the market is bullish or the market is buying. So what does it mean? The market, this is characterized by higher highs and higher lows formation. So the market moves in this pattern or in this structure or in this order flow, anyone you can call it. It makes a high, it drops down, makes a low, it trades up, makes a higher high. That means this high is higher than this one, and then it trades down, makes a higher low, and then it goes up again, makes a higher high. So this is the pattern the market usually moves with, higher highs and higher lows, and that is called a bullish order flow or a bullish market structure or trend. And then the third one is bearish order flow or trend. So this is identified, oh sorry about that, so this is identified by lower lows and lower highs price formation. So what that means, the market moves like this, makes a low, retracts, makes a high, drops down, makes a lower low, retracts, makes a lower high. So you can see this low is lower than this one, and then this high is lower than this one, so it's a lower high, and then the market trades down again, lower low, lower high, lower low, and like that, and that makes it a bearish order flow or a bearish market structure. And then the next one is ranging market. So a range bound market, this one has no definite direction, either higher or lower. It's just bound within an area. It's just bound within a range. It looks like this. The market just moves in this pattern. No higher high, higher low. It's just trading within a range, a confined area. So that's a ranging market. So there are ways we trade on both markets, and we're going to be talking about that later. So this is an example of a bullish market structure. So you can see the market starts here, higher high, retrace a little, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and like that. You can see the market kept on going upwards in a bullish order flow, keeps on giving us higher highs and higher lows. So you can see this is a bullish market and a bullish market structure at the same time. And then this is an example of a bearish market structure. You can see the market started here, started giving us lower low, lower high, lower low, lower high, lower low, lower high, and like that, just like that, lower low, lower high. So if you're selling, you'll be selling on the retracement, and then the trend is just going to continue selling down. So this is a bearish market structure that gives us lower low, lower high formation. I hope that's clear and everyone should understand my explanation. Then this one, it's the ranging market, a range bound market. So like I said, it doesn't move in a clear direction, either higher or lower. It just walk within a range. For example, here you can see the market, it's within a range, and from here it's selling, from here it's buying, from here it's selling, from here it's buying, just like that. That's how the market moves. But this is the secret of trading a range bound market. I would like to share with you. I will just treat that at the same time. So how do you trade on a range bound market? What I do, I draw the highs and I draw the lows of the range. So you just get the area first of the range. So what that means, if the market comes there, I look out for opportunities to sell. In my advanced series, that's part of the mentorship program, it's been paid for. I'm going to teach you how to get confirmations here that you'll be sure about selling. The same thing here. I'm going to show you how to get the real-time confirmation before you sell. And that one is a private teaching because that's the real thing. But these ones are just intermediate knowledge. It's going to get you started, like I said, but this is enough for free information. So if it comes down here, I'm going to look out for the lower time frame confirmation and I'm going to buy just like that. And you can see I marked the 50% level here. That's the equilibrium. So the 50%, it's equilibrium of the range. That's the like center. You don't trade around here, so take note, you don't trade here. The market usually consolidates around the 50% of the range. It doesn't really move. But if it comes down here, these are kind of like discount areas where it's been oversold, so you buy. And then these are kind of like premium areas when it's been overbought, and then you sell. Then observe when the market goes out from the range, especially from the 50% level. The market breaks off the range once it closes above the high. This is the highest high of this range. If it closes above the highest high or the lowest low of the range, let's say the market broke down lower, that means the market will keep on selling. Alright, that means the market has closed below the highs or the lows of the range. And the same thing here too. You see the bodies of this candle, it closed above the high of the highest range. That's why the market started giving us a higher high, higher low pattern now. So this is current chart of EURJPY, daily chart, as at the time I'm recording this video. So hopefully from Monday, the market will continue in this pattern. It's now going in a bullish market structure to be giving us higher highs and higher lows, and maybe coming for these areas and like that. But now the market is no more ranging. So that is what you should understand about the current market's condition. Okay, that's fine. So we're making progress. Now let's talk a little more about the market structure theory. Let's go a little bit more deeper. So the basics of the market structure theory is that the market is going to start with a point of origin. So it starts with a point of origin. It makes an impulse swing. That impulse swing is the first move. It makes an impulse swing and then comes with a retracement, and then next thing an expansion swing. So this is going to make the market to move higher high, higher low formation. So this is a bullish market structure or a bullish market order flow. And then for this one, opposite, the market must start from a point of origin. It trades down, making an impulse swing, retraces, and then makes an expansion swing, and that makes the market to go into a bearish market structure. So that's lower low, lower high pattern or formation. So now, but there's one unique thing we use in analyzing the next market direction in a trend, which is called BMS. BMS is simply break in market structure. So BMS is simply break in market structure. I'm going to explain that. So break in market structure, this is how it happens. Let's use, for example, now this illustration I have here. You can see here the market started with a point of origin. It trades up, makes a high. It retraces down, makes a low. It trades up, makes a higher high, just like the way we understand a bullish market structure. And then it comes and makes a higher low. That's good. It trades up again, makes a higher high, which is higher than this one. And then we expect it to follow the same pattern by coming here, making a higher low, right? And then maybe probably continue like this. So that's the pattern of the market. Retail traders, what retail traders would do, they would draw a trend line like this and expect the market to be bouncing up from there. But it doesn't work that way. The market doesn't work that way. That's very wrong. So This is the pattern of the market now. Higher high, higher low. I'm expecting to keep on buying, but if you observe, it didn't continue the buying here. The market had to trade down to this point and took out this low. So the market broke a previous low, thereby making a lower low in step 4. The market make the lower low in step 4. So that break of this low has completely give us what we call BMS, breaking market structure. So it has broken the pattern that it has been working with. So this breaking market structure here simply tells us reversal. That's the signal the market gives to us. Reversal. That means the market is no more bullish. The market is now bearish. It wants to start selling. So what do we start looking out for? Automatically we start looking out for the market's pattern of lower low, lower high, lower low, lower high, lower low, lower high, and like that. You see? So that's how we use it in the Forex market to analyze. I use it almost every day to analyze the next market direction. It's very simple, very easy to use, and very clear. So let me show you some example of breaking market structure on the chart. So this is JP80, a 1 hour chart. So you can see here, like I said, the market is going to start from a point of origin. So the market starts with a point of origin here and then trades up. That's the impulse swing. It retraces and gives us an expansion swing, right? Automatically it's now in a bullish market structure or order flow. So we're expecting it to keep on buying. You see, it buys from here on the retracement. It buys higher high, higher low. It buys higher high, higher low, and here it couldn't buy to take out the previous high. All right, you can see. So that's a failure in the pattern here. That was why I mark X. So that's clearly where we had BMS, breaking market structure. That's clearly where we had BMS. So what do we start looking out for now? Is a sign that the market wants to start selling. So what do? I start looking out for lower low, lower high, lower low, lower high, lower low, lower high formation. That's the lower low, low high pattern, and the market keeps on selling. So if I was buying here, at this point I'll stop buying and I'll start selling on the retracement. I'll start selling on the retracement, and you can see the good sell-off. So now the market came here, still in the movement of lower low, lower high. The next sell didn't take out the low. The next sellers didn't go below the previous low. That is still BMS. It's still breaking market structure for this sell. So what does that tell us? Is a sign of reversal. And you can see the market just consolidated for a while, but after that it went into a bullish market. It started trading higher highs and higher lows. It got here, failed the pattern again, and then now it's selling. So this is one of the most beautiful and most important thing you'll ever learn in technical analysis in the Forex market. BMS, breaking market structure of the patterns the market has been working with. All right. So, and that's where I got those patterns from by using analyzing the market. So these are examples of how we use BMS. So for example, if the market was to be giving me higher high, higher low, higher high, higher low, and here you can see the market failed to create a higher high. So we had BMS at this level. So what does that mean? That means the market is now selling. The market is now bearish. All right. So I'll be expecting the market to be giving me lower low, lower high, lower low, lower high pattern. All right. So there we go. That's why the market retraced back to this level. In the advanced class, I'm going to be telling you the exact point to look out for if you want to be selling here. And from there, we expect sellers. The market is going to retrace back to this point again. We expect more sellers. The market is going to take out the low, come back here. We expect more sellers. And that is the pattern the market works with. It's like classic support broken, turning to resistance. So here, the market broke the low, retraces, we test lower low, lower high formation, and you can be adding sellers or you can be selling there. And this is for a bearish market structure. So the market could get to maybe a support level or a good key level in the market, and then if you break structure higher, That means if bias comes here and breaks this previous high, that means the market has given us BMS for the downtrend. So what we're expecting now is going to be giving higher high, higher high, higher low formation. All right. So that's that on market structure and patterns. So I'm going to be talking about a live trade example where I use this BMS to analyze the market this week, and how I use that to get a clear trading signal. I took in the live account and I made profit. But I think that's enough for this video. It's already long, so I'm going to continue on the next. So do have to check it, and hope you're enjoying this series and hope you're enjoying this course so far. Drop a like, drop a comment, share, and tell your friends kennyearn is making the best Forex beginner series you ever find on the internet. Alright, see you on the next one. Bye for now.